Hello and welcome back to the Investor Financing Podcast for another Q&A session with Bill Davis here helping out. And remember, you go to investorfinancingpodcast.com/ask. You can ask your questions and we will answer them live. All right, Bill, let's go to question number one for this evening.
All right, this first one comes from Larry. He says, I have a plumbing supply company. We have been in business for 8 years and are growing at about 20 to 30% per year. We currently lease our warehouse. We would like to build a warehouse and get a much bigger yard. We plan on growing our business with more vans for delivery. We would probably be in the construction project for about $4 million, not including the equipment, vans, and FF&E. That would probably be another $300,000. What are your thoughts for a project like this? Thanks.
Okay, that was a good question. So right off the bat, I always think on a project like this, if you're looking for the highest leverage, you're going to want to go SBA, either a 7A or a 504, because there's real estate involved. You've been in business, you have time, so this would be considered a business expansion. Most of it is real estate because you're going to be building this property. It's like $4 million in total project costs with land acquisition and construction build out. But you also mentioned that there's $300,000 of vans and FF&E and equipment. So if you were to do just a 504, you're only going to be able to finance pretty much the build out. So you're going to be able to finance the $4 million plus maybe a construction reserve. And then you're going to come in with 10% of total project cost because this is an expansion. So if you wanted to leverage more, you would probably do an SBA 7A and you could do the build out, the construction, but you could also finance the additional $300,000. In addition to that, with the 7A, you can finance some of your operational costs. You could build in interest carry. You build in enough so you don't have to make payments during construction. So it just really depends how much capital you have to inject into this project. I would say both options would be viable. The reason I would probably sway towards a SBA 7A is because it's only got a 3-year prepayment penalty. And you're probably going to build a lot of value or a lot of equity in this deal. So in like 3 or 4 years, you'll probably have enough equity where you can refinance into a conventional loan. So you pay a little bit higher interest rate today, but I think it's going to benefit you in year 3 and 4 when you're able to refinance. In addition to that, you're going to put down far less capital. So that's also a major bonus. But as always, you can book a call below and we can discuss this in detail. But sounds like an SBA loan, unless you want to come up with about 25 or 30% of total project costs, would be the right fit for this project.
Hi, this is Bo Eckstein, host of the Investor Financing Podcast. Are you a real estate investor with properties and you're trying to figure out how to refinance or grow your existing real estate business? Need some clarity and a game plan for moving forward? I'm offering a free strategy call where we dive deep on your real estate investing goals. I'll help you come up with a strategic finance plan that will help you get to where you want to go. Whether you've got a portfolio of 30 properties or you're starting out with your first property, I have a framework that has helped many investors grow. If you're interested, book a call below in the Calendly link.